Gold has surged to record highs near $4,600 right before the first US inflation report of this year. It's a critical US CPI release ahead of Fed's January interest rate decision. Markets are already scaling back expectations of Fed rate cuts, but gold refuses to back down. So, the big question now is, will US CPI trigger a deeper pullback in gold or unlock another historic breakout? Hey, I'm Dhwani Mehta from FXStreet, and in this video, I'll walk you through key CPI scenarios and exact technical levels that matter when trading gold. Gold is hanging close to fresh all-time highs near $4,600 as we can see in the daily chart. The next big move in gold will be determined by the US CPI release, which will help markets reprice expectations of further Fed rate cuts, thus impacting the US dollar and gold. We'll dive deeper into the key fundamental and technical factors in the video ahead. Gold keeps making record-breaking highs, but the Fed is less likely to cut interest rates. Let's break down US macroeconomic fundamentals. Markets have priced out a Fed rate cut later this month, while odds of a March rate reduction have dropped under 30% from around 45% a week ago, according to the CME Group's Fed Watch tool. This follows Friday's jobs data, which showed worsening labor market, with non-farm payrolls increasing by just 50,000 in December after a downwardly revised rise of 56,000 in November. Unemployment rate dipped from a 4-year high of 4.6% to 4.4% in December. However, gold's bullish momentum remains unperturbed by the less dovish bets surrounding the Fed. So will the US Consumer Price Index report change this trend in gold? Let's take a look at the economic calendar. As measured by the change in the Core Consumer Price Index, inflation in the US is expected to pick up to 2.7% on an annual basis in December. The monthly core CPI seen rising by 0.3% in the same period as against a 0.2% growth reported in November. Now, these measures, which exclude volatile items like food and energy, are most important for the Fed and the markets. Meanwhile, the headline annual CPI is seen increasing by 2.7% in December at the same pace as seen in November. Now, inflation in the US remains too hot for the Fed's comfort of 2%, and that could reinforce markets to question the rate cut story. If you are trading gold, then here are the two main scenarios that you should watch out for on the US CPI release. First, hotter than expected US annual headline and core CPI readings would price out a Fed rate cut in the first quarter of this year, fueling a sharp US dollar recovery and a gold price correction towards the initial support area near the $4,480 levels. Deeper correction would challenge the 21-day simple moving average at $4,400 mark. On the contrary, a surprise downtick in the inflation data would revive bets for a Fed rate cut in the March or April monetary policy meeting. In such a case, the US dollar could see a fresh leg lower, driving gold to fresh record highs towards $4,700 levels. A significant pickup in US inflation is needed for markets to rethink the Fed's rate cut path for 2026. However, any CPI-led move may prove short-lived for gold traders, as geopolitics and concerns over Fed's autonomy should continue to drive investors' sentiment in the coming weeks. Do you expect gold to surge or slip on US CPI? Share your targets in the comments below.